Good afternoon. My name is Alesha Smith, and I am with Century 21 Properties in Hawaii. Joining us today is Brad Kanisha with Harpta Help, and he is a well-known CPA in Hawaii, and he is here to talk to us about Harpta. Welcome, Brad.
Well, thanks so much, Alicia. I really appreciate you having me on.
Thank you so much for joining us. Before we get started, just tell us a little bit about yourself.
Okay, well, I'm a CPA, licensed CPA. I actually grew up in Hawaii. I've spent my whole life here. I grew up in Mililani and moved to town. A little bit later, been married since '93. Have a daughter who lives in New York City. So
Oh,
yeah, me and my wife are going to be traveling to New York City this summer to watch her graduation. But yeah, other than that, I'm an island boy. Started my accounting career off with company called PricewaterhouseCoopers as an auditor,
okay.
financial
Mhm.
auditor. And then from there, I jumped to be the controller at the Honolulu Board of Realtors. And
Okay.
then eventually I found myself in private practice. I owned a tax practice that I ran for 10 years.
Mhm.
Uh, and the goal was assisting realtors and their clients with tax issues. And then so I shut that down at the end of 2019. Beginning of 2020, we opened Harpta Help specifically just for the sole purpose of helping people with Harpta issues.
Wow.
Harpta and
Mhm.
FERPTA, which is, I guess, the federal equivalent of Harpta.
Okay. Well, we can definitely use your expertise, Brad, because there's so many misunderstandings about Harpta. So explain what is Harpta and who does it apply to?
Okay, well, HARPTA is actually an acronym, and it's an acronym that stands for the Hawaii Real Property Tax Act.
Okay.
And essentially, what it is a law that was created, I believe, in the late 80s,
Hmm.
where there's a withholding for anyone who is selling real estate. Actually, HARPTA, technically, it applies to everyone. It's just
Okay.
that people who are residents of Hawaii are given an automatic exemption right off the top. But essentially, for non-residents who aren't able to get this immediate exemption off the top, what
Okay.
happens is 7.25% is withheld from the transaction whenever they're selling real estate. But keep in mind, it's just a withholding. It's not actually a tax.
Okay, that's the misunderstanding. So many people think it's an actual tax. So thank you for
Yes.
clearing that up. And you said it was 7.25% collected for the withholding as when you sell your property?
Yes, that's correct. That's correct.
Okay. Is it possible to withhold too much and are you entitled to a refund? And if you are, how do you go about that process of getting a refund?
Oh yeah, yeah. No, no, it's sometimes it can be too much.
Hmm.
I mean, if somebody has can prove that they have no tax liability, they can even get a waiver prior to the close date, so it doesn't even actually come out of their pocket at all. But if it's not possible to get a waiver of HARPTA, prior to your close date, HARPTA is going to be withheld. The escrow is going to take that money and send it to the state of
Hmm.
Hawaii tax department after closing. So it's
Okay.
certainly possible. There's two ways to get your money back from the state. The first way is to do an early refund where you show the state that your liability is
Okay.
actually less than what they're holding, which it almost always is in almost every case. And if you can do that, then they're going to be obligated to send you a refund. Or you can simply wait until the following year, fill out a Hawaii income tax return in the following year, and
Okay.
then the state would be obligated to give you a refund that way.
So if you have your house on the market and you get a contract on your home that's executed, when should you start that process of applying for the withholding?
Oh, it might be a good idea to call a company like ours, like right at the start when you first accept an offer,
Okay.
because at least, you call us and what we'll do is we can punch the numbers, take a look at your situation, and we can see if it'd be possible to get a HARPTA waiver. So if it's possible to get a HARPTA
Okay.
waiver before closing, of course, it's important to know that right at the start of the escrow phase, right?
Okay.
So what we do is, we inform our clients who call us a little bit early, prior to them accepting an offer. As soon as you accept an offer, give us a call because what we'll do is we'll crunch the numbers then and see if
Okay.
there's a possibility for a waiver. If there's no possibility for a waiver, what we'll do is we'll just wait for the client to close, and then afterwards we'll pick it
Okay.
up when after closing with an early refund.
Okay, that's good to know. When selling a primary residence in Hawaii, is the Hawaii tax law similar to the federal law?
Yeah, it is. I think what you might be referring to is something called the main home gain exclusion. It's
Mhm.
also known as Section 121. I've talked about this rule all the time for many, many years, and I have it on the top of my head. So it's a simple
Wow.
rule. So it basically goes like this:
Mhm.
is a home seller is allowed a $250,000 gain exclusion on the sale of their home, or up to
Okay.
500,000 if they're married and they file jointly if the
Okay.
following three conditions are met. So on the 5-year window ending on the date of sale, they had to have owned the house for at least 2 years. They
Mhm.
had to have lived in the home for at least 2 years as their main home. And then the final requirement is that they could not have used this gain exclusion for the sale of any other home within the prior 2 years. So as long as they meet all three of those rules,
Mhm.
for both federal and for Hawaii, they're able to exclude 250,000 of gain,
Oh,
or up to 500,000 if they're married and they file jointly.
okay, that's good information. Are there any exceptions to the Harpta withholding or no capital gains
Oh,
on
yeah,
who it is? Okay.
yeah. So let me talk about some. Of course, the easiest exception, of course, is at the very top. If you're a resident,
Mm-hmm.
you can claim your residency and you get an immediate waiver of Harpta.
Okay.
Another way to get an immediate waiver of Harpta is to be doing something like a 1031 exchange, which is a
Okay.
specific type of exchange where you're exchanging one rental property for another rental property.
Right.
And so
Yeah, yeah.
any kind of what the IRS calls non-recognition provisions, which are specific types of transactions where the
Okay.
gain is actually shoved off to the next asset that is replacing it.
Okay.
Those types of transactions may allow for an immediate HARPTA waiver, or there's an immediate HARPTA waiver if somebody is selling their home for less than 300,000 and they have to have lived
Okay.
in the home for the last year. But
Mm-hmm.
I mean, this market. We don't get too
Yeah.
many sales less than 300,000. You just don't
Right,
see that very often
exactly.
nowadays.
Yes. Okay. How is HARPTA enforced when you sell your home?
Well, here's the thing: is even though HARPTA affects the buyer, or excuse me, affects the seller, it's
Mm-hmm.
actually the buyer who is responsible for enforcing HARPTA and collecting HARPTA. And so,
Okay.
ultimately, it's the buyer's responsibility to to go ahead and collect the money if it needs to be collected.
Okay.
However, if for some reason the seller makes some sort of claim for residency, for example, that is maybe say, not something that's accurate. If they put it on paper that, oh yeah, I'm a resident, and the buyer has no reason to disbelieve them, then
Okay.
the buyer is no longer responsible for the collection of HARPTA. Now it's the
Okay.
responsibility is shifted to the seller.
Okay. All right. That's good information. Let me ask you a question. I work with many military families here in Hawaii and Texas. Does HARPTA apply to them?
Here's the thing is, most of the people who are stationed in Hawaii, who are military service members, are
Mm-hmm.
actually not Hawaii residents. So they don't, pay tax to Hawaii on their military income.
Okay.
And because
Mm-hmm.
of that, because they're not actually Hawaii residents on paper, and they aren't treated like Hawaii residents, when it
Okay.
comes time to sell their home, they have to claim that they're not a resident and are
Mm-hmm.
usually going to be subject to, to HARPTA.
Okay.
However, we talked a little bit about the main home gain exclusion. Uh,
Yes.
if they stayed in their home, if they've lived in the home for over 2 years, and
Mm-hmm.
sometimes even if they haven't lived there for the full 2 years, maybe they're being PCS, we can often get them a HARPTA waiver just based on those tax rules. The thing about it is, even if they're a not Hawaii resident, they still
Okay.
get the benefit of that main home gain exclusion. That doesn't get taken away from them. So they can use that gain exclusion and lean on that to get a HARPTA waiver.
Okay, that's good to know. So if a military personnel PCS to the mainland, they keep their home here and they decide to rent the home, and then at a later date they decide to sell the home, are they still exempt from HARPTA?
Well, here's the thing is they may be exempt from HARPTA, but chances are usually good that they're not. And I'll tell you why.
Okay.
Is anytime you have a combination of rental activity
Mm-hmm.
plus a gain, and even gain that is not otherwise covered by that main home gain exclusion.
Okay.
Once again, that's rental activity plus gain, if you have that combination, it
Mhm.
creates something called depreciation recapture. And depreciation recapture is actually a taxable taxable type of income
Mhm.
that occurs, and it's going to be taxable to the state of Hawaii. So because of that, oftentimes, somebody who's converted their home from a main home into a rental will
Okay.
have that depreciation recapture, which prevents them from getting a Harpta waiver, but
Okay.
it doesn't prevent them from getting a Harpta early refund.
Okay, got you. Well, you have been a wealth of information today, Brad. I want to thank you for showing up today and joining us on this interview. If somebody wants to get more information about Harpta, where can they go? How can they contact you guys?
Oh, they can contact us at harpta.com. I mean, that's easy. It's easy enough
That is easy.
they're easy to remember. So either at harpta.com, or they can contact me directly, Brad at harpta.com, or call us at our phone number, 808-737-4412. We're usually able to answer the phones between 9 and 4 on weekdays, or, if you have a question that you can't,
Mhm.
maybe you can't get to a phone on the weekday, give us a call on the weekend. Sometimes I'm here. Or if you send me an email, I'll be glad to answer the email.
Thank you so much, Brad, for your time and just giving us this knowledge, and we appreciate your expertise.
Thank you so much.
Mahalo.
Okay, bye-bye.
Aloha.